Welcome to the 129th season of the Canadian Club Toronto, Canada's podium. For over a century, this stage has united visionaries and leaders from politics, business, community, and the arts to share insights on the most pressing issues of our time. And with Canada in a pivotal moment, it's more important than ever that we come together.
We've been having important discussions and debates around this podium in this country for well over a century. I call this a historic podium of record.
Our club's always been a forum for visionaries, public figures, and decision makers to command attention to the issues of our time.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Good afternoon once again, everyone, and a warm welcome to those joining us online. My name is Shazanne Chu, President of Canadian Club Toronto, and your host today. Canada's banking sector is in continuous evolution, where competition, innovation, and scale contribute to our economic prosperity. At Canadian Club Toronto, we are proud to convene conversations that matter, bringing together leaders and ideas that help shape Canada's future. Our ability to do so is made possible by the support of our partners and sponsors. Today's event is presented by McKinsey & Company, with event sponsors Aird & Bearless LLP and CIBC. Thank you for your leadership and support. Thank you. To our season sponsors, Canadian Bankers Association and Carpenters Regional Council, thank you. And we are also grateful to our airline sponsor, Air Canada, and to Canada's Forest Trust, our nature partner, who help us reduce our carbon footprint by planting a smart forest in our honor. Now let me take a moment to remind you to visit our website and its on-demand content at canadianclub.org. And while you're there, consider becoming a member if you aren't already. And we also appreciate it when you share our experience across your social media network. So please help us spread the word beyond this room. And now I'm sure you'll have questions about competition in banking and what it means for Canada's economic future. So please use the question cards on your table. And for those joining us online, please use the Submit a Question button on the right-hand side of your screen. Our team will be looking out for them and share them with our moderator today. And now I would like to call up Richard Luft, Managing Partner, McKinsey & Company Canada, to introduce our guest of honor. Richard, Canada's podium is yours.
Thank you, and thank you for the warm introduction. It is a pleasure to be here today. There has been a growing tendency in Canada and abroad to describe the present as exceptional, a pivotal moment, a historic turning point. And while that sentiment is understandable, what we are facing in this country is not a passing moment. What we are facing is the condition of our nation. Real GDP per capita has decreased, and the prosperity gap with the United States has widened, stemming from years of investment drifting into lower productivity, domestically oriented sectors, and missed opportunities to scale exports in resources, advanced industries, and services. We are a country rich in talent, resources, and home to world-class institutions, many of which are represented here today. But too often, we have taken for granted the comforts of home and underappreciated the seismic shifts occurring globally and in our own backyard. For Canada to get back on track toward a healthy productivity growth, it will have to do more than meet the moment or rearrange the slices of the economic pie. Indeed, the economic pie as a whole must get bigger, a lot bigger, and fast. However uncomfortable, AI and its associated value chain is a key part of that equation. In today's environment, the question is no longer how do we win? The question is how do we transform? Which is why we are here today, to celebrate transformative leadership. Now, this year marks the 100th anniversary of McKinsey & Company globally and 60 years of operating in Canada. A landmark moment that underscores our commitment to guiding leading institutions through periods of immense challenge and opportunity. Now, over that 100 years, we've learned a thing or two about defining characteristics of great leaders. First, they set a bold ambition, often bolder than they may even be comfortable with. Second, they set the pace, fast, and then accelerate. And third, they lean into where the world is going, not where it's been. Canada is a remarkable country, and we should have a narrative filled with confidence. A belief that growth is not only viable but essential, that abundance is achievable, and the pursuit of innovation should be relentless. History favors those who choose to build, and we stand here today because of those visionary individuals. This country has the immense potential to become an inspiring success story, but only if we unite and support that shared vision. Productivity, competitiveness, and resilience don't exist in the abstract. They tie directly to our ability to strengthen our businesses, create jobs, increase trade, and most importantly, empower the next generation of Canadians. And that is the greater good at stake, and why conversations like the one we are having today are so important. Leading us through that discussion today is your moderator and host of In the Money, Amber Kanwar, and the guest of honor, President and CEO of EQ Bank, Chadwick Westlake. On behalf of McKinsey & Company, I'd like to welcome our distinguished guests to the stage, and may we continue to be bold, move at pace, and fulfill our potential as a great country. Thank you.
All right. Good afternoon. Thank you, Richard, for that kind introduction, and to the Canadian Club for having me. I appreciate all of you taking your time to join me for these remarks. When speaking about a topic like this, it's refreshing to see so many senior executives from Canadian banks attending on this historic day. That says something about our united focus. I want to thank former Minister and Chief of Staff to Prime Minister Marco Mendocino, for being here. He's sitting with Noble Chumar of Castles, key advisor to many of us. And my new board chair of EQB, Mike Peterson, here at the head table. Also, my chair of everything else in life, my wife, Kim. I want to use my time today during brownie points with my wife, but also to talk about something that I don't think is discussed plainly enough in rooms like this one. Not just the future of banking, but the future of Canada. And why those two things right now are inseparable. Before I get into my remarks, I want to share an exciting announcement. This morning, we announced the Government of Canada just approved our acquisition of PC Financial, and what I would deem as a historic approval pace that we have never seen in Canadian banking. That completes the approvals. We're now preparing to close this summer. Congratulations to my challenger team at EQB, who's scattered around the room, that have worked so hard. And at Loblaw companies, we're officially at the start of something extraordinary. We have all consistently heard from the Prime Minister that Canada needs to act fast and be decisive, moving at the speed of the private sector. The speed of this approval is a testament to those words being translated into action. I am grateful to the Prime Minister, to Minister Champagne, to officials who worked through this with us, including the business-minded champion of free market competition and banking, Deputy Minister Nick Westlake. And I want to thank every part of the government that moved with the kind of urgency this country needs more of: the Competition Bureau, OSFI, the Department of Finance, and the Minister's Office. It is a good day for EQ Bank. More importantly, it's a good day for Canada and our banking industry. In fact, I was pleased to receive a call just a couple hours ago from the Prime Minister's office, congratulating us on this historic day in Canadian banking. Even though Prime Minister Carney is in Armenia representing our nation with Europe's leaders, he made a point to send his support and best wishes to us as EQ embarks on this new chapter of bringing more choice to Canadians in how they bank. I will use my time today to explain why this matters. I spent most of my career in banking. While I left the industry briefly to champion another critical Canadian sector, I came back to banking into EQ Bank because I believe we are genuinely at a defining moment. The kind where the decisions we make or fail to make over the next few years will shape the economic future of this country for a generation to come. The trade threats facing Canada are real. Global uncertainty is real. The assumptions that underpin Canada's prosperity for decades about who our partners are, what markets we can count on, where our growth would come from, those assumptions are being tested in ways we've never seen before. When that happens, when external forces squeeze you, the only viable answer is to build a stronger engine at home. And that means asking hard questions. Is our own economy working as hard as it can for Canadians? Are our biggest industries competitive enough to drive the growth we need? The theme of today's event is competition, and I want to use that word in two interconnected ways. First, Canada competing as a nation, building resilience, reducing dependence, generating domestic growth. Second, championing greater competition within Canada, making our own industries work harder for the people who depend on them. For a country to compete on the world stage, its biggest industries must be competitive at home. That is where I want to start. Let me give you a picture of where Canada stands. 15 years ago, Canada ranked 5th on the Global Happiness Index. We were leading G7 economies on productivity. We had a balanced growth model, strong investment, abundant resources, and a global reputation for attracting talent and capital. Canada's happiness ranking has since fallen to where it stands today, 25th globally. Our labor productivity has declined year over year for a decade, and our gap with the United States continues to widen. The Canadian middle class, it's shrinking. It's facing increasing affordability challenges. And with a household debt-income ratio above 170%, that is the highest among G7 economies. Now, I'm not here to dampen the mood. It's actually quite the opposite, frankly. Canada has extraordinary assets, a highly educated population, deep and experienced capital markets, and the third largest oil reserves in the world, alongside world-leading positions in potash and uranium. The fundamentals necessary for Canada to remake itself are here. But to paraphrase the Prime Minister, modern governance must be capable of testing, adjusting, and acting, because capital doesn't wait, and neither does Canada. Canada needs an economy that is competitive, that pushes every sector to do more with what it has. And while we can often focus on manufacturing, resources, or innovation broadly defined, our economy also relies heavily on our financial system, a system which is not currently delivering for everyday Canadians the way it could or should. But I believe we have a rare, time-sensitive opportunity to change that. Banking contributes approximately 8% of Canada's GDP. That is one of the highest ratios of any developed economy in the world, higher than the US or the UK, or even Korea, Australia, or the Netherlands. Our banking system provides economic infrastructure, enables capital allocation, and directly shapes our national productivity. This is not a sector on the margins. This is an essential system. And right now, that system is not working as well as it should for everyday Canadians. Canada delivers the highest banking return on equity among developed economies, more than 15% in their Canadian operations, compared to around 10% in the United States. That gap affects a system that has not been structured to put customers first. The consequences of that imbalance show up in predictable ways. Capital flows disproportionately to low-risk, asset-backed lending, and not to the small businesses in high-growth sectors that create jobs and build livelihoods. It shows up in consumers being pushed into higher-cost fees, in the emergence of high-priced and non-bank lending, and in small businesses that cannot access the capital they need to grow. Canadians pay some of the highest banking fees in the developed world. The average EQB customer saves more than $200 per year in bank fees. We believe that's money that should be circulating through the economy, better served building households and businesses. And it shows up in household anxiety. We surveyed everyday Canadians recently through Angus Reid. Economic uncertainty, linked in meaningful part to US trade policy, is now affecting the personal financial decisions of the majority of Canadians. 2 in 3 are reducing non-essential spending. Nearly half of those who hold an emergency savings fund are expected to draw on it this year, mainly for essentials like rent and groceries and mortgage payments. More than 1 in 3 Canadians are delaying major purchases or financial goals, things that will have long-term ripple effects on economic growth. In practice, this anxiety lands on every household, every year. And in a moment when Canada needs every dollar working harder to build a more competitive economy, Canada's banking sector is not the engine of prosperity. It should and could be. The financial ecosystem is moving fast. Digital-first challengers, AI-driven banking, open banking, embedded finance are not future state concepts. They're here now. And global fintechs are circling this market. British, Brazilian, American, and others who see exactly what I see, a large and very profitable market that isn't as dynamic as it could be. So the question I ask is this: should we make room for them? Or should we build something better right here? Because here is the asymmetry we rarely talk about. A non-bank foreign fintech that wins in this market doesn't carry a CDIC guarantee. It doesn't necessarily deploy capital back into Canadian communities. It doesn't primarily pay Canadian taxes or create Canadian jobs. I think you can guess my answer to the question I just put forward. But this categorical shift requires action and genuine competition. Limited competition reinforces complacency. It limits innovation. And without the structural disruption that only a real challenger can deliver, these dynamics won't correct. The good news is that the government is responding. The Consumer-Driven Banking Act is now being implemented. The new federal budget sends an unambiguous message on competition. And the decision to quickly approve our transaction with PC Financial this morning sends a clear signal that this government understands the urgency of the challenges we face. That kind of action matters. It sends a signal to the entire market that Canada is serious about competing. So as the CEO of Canada's Challenger Bank, let me tell you what I think a genuine challenger looks like and why it matters that Canada has one. EQ Bank is a federally regulated, full-service Schedule I bank, the same designation as any of the Big Six, but built from day one with a different mandate: to serve and build outcomes for everyday Canadians who deserve more options, lower fees, and a bank that actually competes for them and their business. Canada, again, is one of the most profitable banking markets in the world, but it's also highly concentrated. As we all know, scale matters in banking, particularly when thinking about making investments in innovation and AI. Competing in a concentrated market requires a platform large enough to matter, to actually move the needle, to force the incumbents to respond. Today, we serve more than 800,000 customers. We were named the top banking brand in Canada and North America by The Banker magazine. We grew our customer base by 18% last year and our deposits by 10%. And we expanded into small business banking last October, creating real competition in a segment that's been chronically underserved. The average EQ Bank customer earns more than $1.50 per day in interest. When we close with PC Financial and bring in 2.5 million more Canadians, that means the basic possibility for an additional nearly $4 million of interest back in Canadians' pockets every day. Thanks. Last year alone, we originated $5.5 billion in single-family mortgages, funding homes for Canadians whose circumstances, self-employed, non-traditional income, a career change, it required the kind of flexible, customized underwriting that EQB is built to do. These are Canadians who work hard for their money. They deserved a mortgage, but were overlooked by the traditional big banks. But they successfully bought a home because we underwrite to the person, not to a formula. And just last year, we originated $7.1 billion in CMHC insured multi-unit housing, making affordable and purpose-built rentals possible in communities across Canada. Every unit matters to a family that is stretching their dollars to find somewhere to live for their families. But here's what has changed, and why this is such a pivotal moment. What has changed, again, is scale. Our combination of EQ Bank and PC Financial, which is really more of a merger, alongside a new long-term strategic partnership with our soon-to-be largest shareholder, Loblaw, is a step change for EQ and for Canadian banking. It will quadruple EQ's customer base and nearly double our revenue, plus dramatically diversify it day one. We become the exclusive financial services partner of PC Optimum, one of the most loved and powerful consumer loyalty platforms recognized and used by households across the country. And to our expanded customer base, this partnership will deliver everyday banking, lending, payments, home and auto insurance, and loyalty rewards brought together for millions of people in a single integrated ecosystem. Within that ecosystem, saving, spending, and earning rewards aren't separate acts. They're connected, and they'll finally add up in a meaningful way for everyday Canadians. And this is not just great for our soon-to-be millions of customers, but an ambitious challenger at this scale will force the entire market to respond. That is how competition is supposed to work. Act as a challenger at scale. Then we can meaningfully apply pressure, the institution serving the other tens of millions of Canadians, driving faster innovation and stronger competition across the entire system. Move it all along. I also want to be explicit about something that often gets lost in discussions about banking and competition here at home. Every dollar of capital that EQ Bank deploys is deployed right here in Canada. It's reflected in Canadians finding a home for their families to own or rent, Canadian small businesses, Canadian consumers who deserve a better deal. That is not incidental to our model. That is the point of it. We're a Canadian institution with a Canadian mandate making a Canadian bet. And that bet is that this country's consumers and businesses are worth investing in at scale. So $1 of your capital into EQB, everyone, that's $1 into Canada's prosperity. Together, EQ and PC Financial invest over $100 million annually in the technology that makes better banking possible. Combining these efforts means we can cover new ground. And because of this transaction, it preserves jobs and is about growth. Every dollar of that combined capacity goes towards building, not reorganizing and simply cutting for profit's sake. I want to take another moment to acknowledge what the government has done here. Moving quickly on our transaction was not just good for EQ Bank, it was a statement. It's a statement about what kind of economy Canada wants to build. With this approval, the government has said that we believe in domestic competition. We believe that a stronger challenger bank means a better deal for every Canadian. And we're willing to act on that belief. We are grateful for that, genuinely, and we are committed to justifying the confidence it represents. But the transaction is one piece of a larger agenda. The work continues, continuing to move with urgency on open banking and payment modernization, reviewing capital treatment frameworks that structurally disadvantage fully regulated challengers, including EQ Bank, and ensuring OSFI has a pro-competition mandate alongside its stability mandate. The superintendent communicated in the media again this week OSFI's positive support for more regulated competitors at a faster, responsible pace. These reforms will benefit all of us. This government has shown us the difference an urgency mindset can make, and I have every confidence that will continue. Every day that Canadians cannot access genuinely competitive banking options is a day that money should be helping build their future and our children's futures. It's gone somewhere else or simply been wasted. And in this environment that is not a theoretical concern, it is a real cost landing on real people. To close, I want to reinforce that I believe Canada has everything it needs to elevate to a different future. Extraordinary talent, deep capital, natural resources that economies across the world want. The third largest energy reserves on the planet. We're not a country short of advantages. What we need is the will to challenge the status quo and to bring some real competition to banking in Canada, to make our own industry work harder for the people who depend on it, and stop accepting concentration and complacency. The dual competition imperative is this: Canada cannot compete on the world stage if its biggest industries are not competitive at home. Banking is where that starts, and we are poised to lead. If we get this right, when we get this right, three things happen for everyday Canadians. First, their money works harder every day. This comes through by customers' money working harder for them in the background, earning more interest and saving hundreds in fees to put back into their families' well-being. That will add up for Canadians in a visible way as they are rewarded for the actions they take, so their financial progress feels tangible and immediate. Second, we help unlock home ownership for more Canadians and expand access to safe, secure housing options across the country. The $5.5 billion in single-family mortgages and $7.1 billion in affordable and purpose-built rental housing we delivered last year will grow with scale as PC gives us even more. That means more Canadians who need a more flexible, human underwriting process can access one finally. And third, every dollar stays in Canada in a Canadian bank, backing Canadian communities, paying Canadian taxes, creating Canadian jobs. At EQ Bank, this is not an aspiration. It's already what we do every day with every dollar, and we aim to take that to a much larger scale. So let me wrap with a simple idea. When we complete the PC Financial acquisition, EQ Bank will represent roughly, call it 1% of Canada's $320 billion in annual financial services revenue. That's a starting point. And I want to ask, what if we could just do 1% better? Is that really crazy of a thought? 1% more? What if every Canadian household had 1% more back in their pocket? What if we all moved even 1% faster as a starting point every day, like compound interest, and then compounding progress? That is what starts to happen when Canadians pick a bank that starts earning for them rather than from them. And what will happen when our scale allows us to challenge the entire market to do better and offer more. That's not a banking pitch. That is a Canada pitch, and I believe we can deliver it. Thank you.
All right, I got to bring everybody back down to earth. I was going to start with a softball question, but now I think I'll just go
Oh, no.
right for the jugular.
Cut her mic.
And yeah, kind of a devil's advocate. You know, we're here to talk about competition.
Yep.
And it's so funny because in banking, I almost think that we, excuse me, when it comes to Canadian banking, it's almost a point of pride. The fact that it's concentrated, best, most sound banks in the world. We don't fail as a result of, you know, the fact that we are more risk averse, right? That's often celebrated. I think about when I go to the US and people are asking me to Venmo, and I say, oh, we just email money in Canada because only a few banks had to get together and figure that out, not thousands. What do you say to that argument?
You're supposed to start with a softball.
Your speech was too long. I had to get right into it.
Look, Amber, I don't believe when you think of stability. So part of why we were very proud, and we should be very proud, going back to 2008 with our banking system, is the stability. We are regulated extremely well, if anything, to a conservative extent. But I don't believe stability and competition are at conflict. I think more competition can actually still perpetuate stability. And actually can bring even more innovation within that stability. I don't see that as a problem. I think what's a problem is choice, because we don't actually provide that to Canadians. They should be able to choose what kind of stable organization they work with, whether that's regulated or not. Obviously, we're regulated, but I think it's about more choice and options, and putting that into people's hands more. So I wouldn't want to take it away, and I would never say my remarks or the fact that we should rethink regulation in Canada. I think it's more of how we deploy that regulation, even when it comes to capital standards. Why I say that, we think fairly traditionally, and you know, it's been 20 years even since there was a bank move from standardized to the advanced internal ratings-based capital model. You know, why does that make sense? So, you know, there's a lot of things that could change that result in better competition, better choice, and better value for Canadians. Well, and I think we can do that. I believe we can do that while maintaining that stability as the best banking market in the world.
I wonder if the other banks are on board because CIBC is here. Yeah, that's the others are there. Is this like a widely acknowledged? You know, you're here, you're bringing it up, but is it an open secret among all the dominant banks that this is a reality now?
The need for more competition. I give our peer banks a lot of credit. I really do believe they welcome it. I think that's actually a testament. And thanks again to all the banks, the Canadian banks, really for being here today, because it is a unified focus. Like I said earlier, I truly believe this is, these things are wild. This is it's like, yes, no. This is why I said this is not just about banking. I think what everyone recognizes, this is about our country and our financial system. This is the banking, when I think about it, this is like the circulatory system of a country. And I believe everyone is vested in ensuring that circulatory system is even healthier, moving at the right pace, improving, because everyone wants to do better. And this country and our banks will not be left behind. And if we don't get our act together, that can happen. So I do, Amber, I believe that. And I think when we think of Bill C-15 coming to royal assent and more competition, I do think you heard everybody's voice around the table for that. And there's wonderful fintech partners here today that are driving the ecosystem. Thank you. I saw the Borwell team earlier as well. Everyone is here, I really believe, in a united way. And that says so much about our country right now when we need it, and we've needed it more than ever.
I think it's important to talk about how that filters into the real economy. I mean, you spent a lot of time talking about fees as well, but you mentioned the circulatory system. Lending, right? Lending to businesses and letting them do something, you know, that is maybe a little riskier. Well, when there's more competition, maybe you have to go out a little bit further, right? So it is maybe a little bit of trade-off on stability, but it's allowing that business to get up off the ground in a situation where maybe it otherwise wouldn't have to because other banks don't have to lend to them.
I completely agree. I think we get too fearful of failure. My new board chair is here, so I should never talk about failing, but I think where we share a sentiment is move fast. It's okay, that statement I think still holds of move fast. It's okay if you break some things. Our superintendent, I saw it again this week, he's actually opened up people's minds to the fact maybe it's okay if a few institutions fail along the way, but we make a more prosperous country and banking system. I do think we need to accept that. So you can have certain guardrails everyone needs to operate within. I do believe in regulated guardrails personally, and give them the tools though to move faster and go bigger. And if they fail, maybe that is okay, right? But I think we have a better end product.
Let's underline that. Just how much of a change in your long career in banking is the tone from OSFI, is the tone from the government about competition, uttering words like maybe it's okay if a few small things fail?
Yeah. I haven't heard that before. I've been in banking. I started as a trainee in a branch coming out of the University of Waterloo, and aside from a short period of time where I left and came back, I've been in banking a long time. I've never seen anything like this. This is why it's so encouraging. You think when you step back and think of Canada at scale across industry, this is a big, complicated country with a lot of industries, and you have to think of competition in every one of those sectors. What does that mean? But what I can say and speak to now, today in this moment, many of us will remember as a historic day with what happened with PC Financial. So contextualize this. There's been some coverage of this where in history in Canadian banking, you can often see a regulatory approval require 9, 12, maybe 15, 16 months to actually complete approval. And that's for a variety of reasons, let alone new bank licenses being issued, et cetera. The United States is moving at a pace probably more of 4 to 6 months. If you think of when our application went into when this was approved, we're talking 3 months and change. That what the government is saying is this is an example we're making of how competition is going to be improved and supported in our country with the fastest pace pretty much in the world with this type of transaction. So I think they're making a statement here as well of competition changes they believe in. So I believe it's changing. I believe the words are going to translate into more actions, and we need to keep that pressure on in every one of our sectors to make sure it doesn't stop. It can't just be 1 or 2. It's got to be a lot.
What do you think the catalyst is for this change of heart? There's your softball.
Well, yeah, well, no, it's, look, Canada is in this position, so there's different factors you could say, right? So we have a new government that I believe understands this in ways that we've never understood it before. I think Canada already had an issue. So people have looked at the U.S. saying a lot of things are kind of pointing fingers at what's happening with U.S. trade. I think that was more of an accelerant versus the catalyst. This started happening with Canada, as I talked about in my remarks, really 10 years ago, 15 years ago, we've been just way too casual about this. And I've used the term again, sometimes in Canada, of complacency. We haven't had that fire in our bellies. We haven't pushed hard enough. We haven't maneuvered hard enough. And I think now with what's happening, the amount of everyday Canadians being impacted by what's happening on a geopolitical level, I think people are opening their eyes up, and our government is opening their eyes up more than ever because we must. If we don't, people should be fearful. I think people are scared now. You should be scared if we don't actually get our act together, get our butts moving across every industry, and put our national competitive capabilities, really dial it up.
The framework about how we talk about the U.S. has been very, it's been basically said by the Prime Minister that the relationship as we know it is over. And an alternative approach has been, let's try and work on repair. What do you think the right framework is? Is that a helpful framework? And maybe you don't care because you're just in Canada, although you're affected by what's going on. But is that a helpful framework for this new reality that Canada's in?
One of the many things I appreciate about our government and our Prime Minister is the honesty. There's no sugarcoating. Do I believe in his statements? Everyone can have their views of their statements, of what's working well or not. I believe in the relevance of the statements, and I think he's trying to really provoke and say, look, we will give you the tools, we'll make the change, we'll introduce the programs to drive the change, and I think he's speaking to us very openly and bluntly. It's interesting when business a business mindset takes over politics, right? This is about real things at a real time. So I think he's telling us what we already know or what we weren't recognizing quickly enough and putting it into action.
I think competition is the cure for a sickness, but in the meantime, there's some triage that needs to be done. There was just unveiled stimulus measures to help those affected by particular the aluminum and steel tariffs.
Yeah.
And there was a specific call out for the banks to be part of this. Do you think that's appropriate? And what has that looked like at EQ?
It is appropriate. I believe it's the same thing, again, where banking is, again, part of the ecosystem. This is how we're going to enable a lot of this change in the funding for these industries. Even the defense funding as well, I think, is entirely appropriate. EQ has not been as involved, per se. I think we're more involved with the everyday people that work in those industries, right? So we're grassroots. That steel worker, that auto worker, that self-employed worker, that truck driver, we're out trying to help everyday Canadians. And I often view our company as a reflection of everyday Canadians. That's why I say it so much. Because, to be honest, I do believe in the K-shaped economy is taking a pretty significant force, but it's every day that matters. So we are there working hard to get them somewhere to live, whether that's a rental, whether that's a home. Those are the ones we're focusing on, and making sure they're not overpaying for banking fees, making sure they can move money, making sure they're in a position to save. So that's the bigger picture. We're not as much on the corporate banking side. We're about kind of the grassroots of the country.
Well, that's good perspective because, as you said, I can cite all kinds of data, the unemployment rate, wage growth. You've got a lens into 800,000 accounts and millions more soon with PC Financial. How would you characterize how, maybe it's the bottom K, is dealing with some of those stats that you and I both reference?
Yeah, one thing, I've been a banker at a couple different banks. The one thing I've learned and believe to be true, and something I value deeply about our company, we don't look as much about the stats, we look at every person as an individual, as a human. And that's why we underwrite every loan. We don't look at it as a kind of a factory line of what's your credit score, good, keep going. We try to identify with every person. And every person is performing differently or managing their lifestyle differently, their financial health. So think, for example, a reverse mortgage customer, right? It's kind of a terrible brand, to be honest, in Canada, but it's really about inheritance planning, capital gains planning. In many cases, grandparents trying to help their kids get a home, right? Those customers are performing fine. They're fine. They have great financial health. But you have some in the self-employed side that have definitely, some of them are struggling because unemployment, you're right, is going up. Self-employed often have different resilience that we believe in, but it is impacting everybody. And that's why I use the stat of 2/3 cutting back on non-essential. 1 and 2 using their emergency funds. That is near devastating. Like, people need to be rattled by that. Kim and I spoke with our kids recently when we were driving, and it came on the radio, somebody being interviewed about the fact that gas prices being up meant they needed to trade a meal a day for their family. And not everyone in a certain shape of the K gets that. God damn it, we need to get that, and we need to help fellow Canadians. And that's where I think, Amber, there's no way to paint a brush. We have several segments. We support developers, like Darren's here who runs our commercial bank. He's supporting a lot of developers get these apartments up, these purpose-built rentals. They're all feeling in a different way as well. So you have to be very precise on different parts of the business, but I'd say it's very inconsistent. I think we have more headwind ahead. I think a lot of people generally think the economy will stay about the same for the next 6 months. I, for a while, have been in the more cautious to neutral to some cases negative. And I think we have a bumpy couple quarters in this country. And that's okay, because if you take the action now to improve things, we're going to come out in a better place. But we don't have any days to waste, because that family that had to trade a meal, that's not right. So that's why we want to be part of the solution. If we can even save them some fees, save them a few bucks a day, can matter. And I'm focused on every person and every dollar back in their pocket.
Is there enough action to meet that moment? And I ask that because, I talk to a number of executives, and I know you do too, it's getting louder, but a lot of those conversations were behind the scenes. And it was, you can disagree with what's going on in the US, but there's a lot of action. There's a lot of consequence. You want nearshoring, the US, they're just gonna take a 10% stake in Intel. That's how serious they are about this. So there's a lot of talk in this country. Is there enough action?
No. No, there's definitely not. And I'll be the first to say that, but while celebrating at the same time the action. So I think people, today was not necessarily about EQ Bank. I truly believe that. When the Prime Minister's office called me and Mark Carney wanted to share his sentiment for everything happening, this is meant to be an example of the fact that they recognize that they're not moving fast enough, but we're going to. So I think it's piling up by the day of actions, but I don't think we're anywhere where we need to be. You know, I've been speaking about this since taking the job, that we need the urgency, we need the action. We've been very aligned, but we're, you know, I don't know if I could say we're 10, 20, 30, 40% of where we need to be, but we need a lot more. And we can't stop, because it's almost one of those things you think, okay, great, we did this. Phew, go back to, there's no normal world anymore. This is not going to stop. However way you contextualize it, this is going to be the pace we need to keep going. And in our company and in our board, we're talking about this every day, because we have to move faster. I believe our government, many of us, make people uncomfortable, make them scared, throw Hail Marys. Yeah, break some stuff along the way, but damn it, go faster. You thought this looked good? Go to here. Even if you fall a little bit short, you're still farther than you would have been. That's what we talk about at EQ. Dream, go big, go high, take action. And that's where all this has to keep adding up. And that's why I think government needs to take some big actions, even things we didn't contemplate. Go bigger, and that's going to help us.
I also feel like we're hearing more executives like yourself, but maybe your peers as well, talk about this a lot more openly than in the past. Am I right in that assessment, and what's driving that?
I think so. I think so. You know, you hear more about the support, and I think it's rightful. I think a lot of people have been a little bit fearful about the brilliance of our fintech community and the innovation that brings to Canada. I've heard more about our credit union system come out more. People weren't talking about credit unions for years. It is so important coast to coast in this country, and the 6 million members credit unions serve. People are talking about, hey, how do we help them more? We are direct partners within that. But everyone's openly acknowledging, because I think it's just been this closed off thing. And until one or two people talk about it with confidence, it stays closed off. So yeah, no, I do think everyone's speaking about it, and they're comfortable with it. And I think if it wasn't today, nobody would be here. Because everyone's really aligned around that. They're aligned around our sovereignty.
And I want to know, to bring it back to EQ, you're doing what you can doing these talks, but at the end of the day, it's all about driving that through. EQB, right now, the smallest bank left of the large ones, $4.5 billion market cap. The next biggest is $80 billion in National Bank. That's such a huge gap. Where are you taking this business? I mean, when you think about your boundless ambition, are you top 6? Are you top 5? Like, what's going through your mind? And shed a little bit of light on how you get there.
We're going to be number one, the number one challenger in this country. That's what I focus on. I'm not... It's not about... You don't have to compare yourselves to others. You know, if you have a fundamental purpose, you're focused on your cause. My cause is ensuring people have a home to live in, that businesses have the funding they need to build buildings, to operate, to ensure the prosperity of our country. That's what we're focused on. And we use our competitors as to inspire us and to push them further. But we're going to be number one at what we do. We're going to be number one in the products we build and how we serve people. That's my objective. When you say market cap differences, you know, sure. Even when I started EQB, we were a little over $1 billion market cap. When we close PC Financial shortly now, we'll be pro forma well over $5 billion market cap. You know, you go into relative terms, that's pretty great, but it starts with, can we do well for people? And then in return, do well for our other stakeholders and our shareholders. As a public company, that's incumbent. So that's where we start, that's where we're gonna stay. Anything else is opportunity, and people should be looking over the shoulder, because we're gonna come make sure we do it or somebody else does it. But it starts with Canadian households.
I hate to, go ahead. I know you're just kind of at the beginning of your PC Financial journey, which is probably going to take, 18 months to fully integrate. what's next? Or do you have to?
We will have an Investor Day this year. We will share more at that Investor Day, but I'd say we are very focused on our core businesses where we've traditionally operated. We've been around for over 50 years. And before some of this stuff started happening, it's okay. I won't make everyone put their hands up, but I'd say probably a year ago, had everyone in here even heard of EQ Bank? Anyone who didn't? Wow, this is good. Everyone's not being truthful. But so look, one of the steps is you do something big like this with the largest, in my view, strongest retailer in the country. And both companies have a shared culture and a shared sentiment that we want to make this a better country and we want to help everyday Canadians. And we're going to focus on executing that really, really well and bringing the best to our millions of new customers. So that is going to be priority number one. Close it, execute it, and bring together the aspiration that we aligned on in this process. And then we're going to make sure we're continuing to be number one in our core businesses. That single family, that multifamily, it's kind of like 6 billion single family, 7 billion multi, 6, 7 kids. We're going to keep those trends up, right? Where are we number one? Where are we winning? And you'll see some new things from us in the future as well. But a lot of people say we're just getting started, but this is one of those examples, right? We've had a beautiful chapter before us. My predecessor had a vision, one that him and I shared in close heart. And that vision went to a certain place. I'm proud and privileged to be leading the largest and number one challenge in this country. And I have my vision that will continue that, and we will never stop.
There you go, Chadwick. Thank you so much.
Thank you so much, Amber. Really appreciate it.
Thank you.
Chadwick, thank you for your insight and leadership. We're so glad you chose to join us, especially on Today at Canada's Podium. Amber, thank you for guiding such an engaging discussion. Thank you again to McKinsey & Company, Airden Barlis LLP, and CIBC for making today possible, and to VVC Live for your excellent support. We continue to program some important events in the next few weeks, including on May 11th, we host the CEO of Trans Mountain Corporation, Mark Mackey, and the CEO of Canada's Development Corporation, Elizabeth Wademan. On May 13th, we'll hear from Tom Jenkins, Chair of Open Text, to discuss the data and AI imperative. And on June 1st, we will welcome a conversation about Canada's agriculture imperative with Justine Hendricks, CEO of Farm Credit Canada, and Alison Sundstrom from Naya Ventures. Members and guests, thank you so much for joining us today. We hope to see you again soon. Thank you.